You know I try to be a good man. I always give it my best. But truth be told, someday I want to go to the wild, wild west.
And now, live from our Smokehouse studio, it's time for Real Estate Jerky. All your real estate questions answered by a provocatively lean expert host, Ed Parcaut, MBA, veteran, and president of Lending for Living. And today's special expert guest, real estate advice you won't find anywhere else. Plenty to chew on, starting now.
Hey, good afternoon. It's great to be here with my special guest, first-time homebuyer Thomas Orosco, correct?
Yep, that's it.
All right, and Betsy Hurst-Younger, who is a realtor at Century 21 Wildwood Properties in Twain Harte. Thomas and Betsy, thank you so much for coming in today. How you doing, Bets?
I'm doing good. I'm glad to be back.
Yeah, it's about time.
I know.
You've been playing so much. Different conferences, I take it, you've been at?
Different conferences, different, vacation, conference, reunion.
So how was that? Was that your 15-year reunion for high school?
Exactly. No, my 40-year class reunion, it was great. Yeah. It was great. It was well attended, and a lot of people were there that I knew.
How many was left in the class?
I don't know how many are left, but there was about 150 that attended.
You know what I mean? As we get older, we lose more and more people as we get older. We don't keep adding them. It's just,
It was more about losing hair.
Oh, yeah. Well, I did that years ago, so It doesn't matter. So, Thomas, what's new with you? Anything?
Just work. Happy to be here. Thanks for having me.
Oh, we appreciate you coming on.
Yeah.
We're kind of doing things a little differently today. One of the things I want to talk about is, with home ownership, we help people get into homes because we feel it's the, way to create wealth is through home ownership. And we wanted to talk to a first-time home buyer who got into a home and their process and what they felt about it, what they know, and how they got started. So let's jump right in. So, Thomas, what made you get on the path of home ownership?
Well, I got engaged to Haley, my girlfriend of 5 years, back in August of 2018. And we set the date for May 2019. And, I thought it'd be great to have a house ready to go so we could, start our lives together.
And how'd that work out for you?
Great. Yeah, worked out good.
When are you, so you're engaged, right?
I'm married now.
Married now.
Yeah.
Okay.
Yeah.
What day did you get married?
May 11th.
Okay.
Yeah.
And how long was the engagement?
Less than a year.
That's good. Yeah. At least it's not like one of those 5-year ones, right?
Right.
Yeah, no.
Those people are. It's like
she wouldn't want that.
Yeah. I was watching a show the other day, and it's like, oh, it's our 2-year, and the lady's looking at the glass to see if there's going to be a ring in the champagne glass, and she goes through the the cake on the thing to see if there's going to be a ring in there, and it's like, okay.
She didn't swallow the ring like that one lady?
No, I guess there wasn't any. All right, so how did you get started looking for, because you don't just, I guess you did wake up one day and say, okay, hey, I need to get a home now.
Yeah.
I'm going to get engaged. I want to do this process to get to a home, and I'm going to family. And
yeah, well, Haley and me were talking about it. We were engaged, and, we thought it was an option. We started looking at open houses. And then, as we were looking over the different houses, it was time that we got serious type thing. You know what I mean? Because, okay, we're actually looking at them. Let's see what I can get approved for. And then I made a couple calls, had a number in mind, and then just kept on looking at open houses. And then my dad actually listens to the show, and he told me about you, and call you and see what you could do.
Well, I appreciate that.
Yeah.
How did you find a realtor?
Haley's best friend Lauren is a realtor, actually.
Great.
They're like a dime a dozen around here.
Okay.
But it was nice. I felt like because we were friends, so I knew her, so I felt like I could bug her more.
Right. Yeah.
It was good to have that relationship.
Yeah. And then you could call her anytime, right?
Exactly. Yeah.
9 o'clock at night, 10 o'clock.
Text message, 2 in the morning.
What does this mean exactly? Or
Exactly.
Can you call her right now at 10 p.m.?
Exactly.
Now, but did you think you could you could buy a home? Did you I know I can do it.
No, I wasn't sure. Not in the beginning. That's why.
So how did you? Okay, so you got serious.
Uh-huh.
I know I wasn't your first call,
right?
But when we got, and basically you had to figure out. Someone had to tell you, yes, you could afford it, right? And then, did you think there was a minimum you had to put down or a maximum?
Going into it, I thought 20%, and that was going to be it. And I was like, I don't know if I could do that, but maybe there's a chance that there's certain programs out there. I was looking at maybe down payment assistance type thing. So I called around and got a couple of quotes essentially, and it became more realistic.
Right. So. And a lot of people think that you need 20% down to buy your home, and you don't. That's one of the things you have to not. Because you have in certain areas, there's USDA, which is 100% financing. If you're a vet, you can do 100% financing. FHA is 3.5% down. You have conventional, you can get in for as little as 3% down.
Right.
And I don't know how much you want me to talk about your transaction at all.
Yeah, you can.
Okay.
As much as you want. That's fine.
All right, because you did 3% down.
Right, and that was I was pretty happy with that. I like the leverage.
Well, that's how you make the most money in real estate, is by the leverage of the home. You know what I mean? The amount you put in, because you think about it. If you look at stocks, when they appreciate, you have to pay the full price for the stock, right? You're not buying a portion of that stock. You don't get to leverage the stock. Right. So
Makes
that's
sense.
the same thing with a home, where you get to leverage. You got, let's just say it was a $300,000 home. You got in for $9,000 plus closing costs, right? So that's pretty inexpensive to get into a home.
Totally. To start building equity, I think it was pretty good.
Right. And this year we've already gone up in Modesto half the year 5%, and they're saying the next half is going to go up another 5%. That's 10%. So you made $30,000 your first year. That's a pretty good number.
Not bad.
Yeah. I mean, and I can't say it's going to do that forever, but even if you look at a 4%, which is an average return over the life of a transaction, that's a good appreciation. I mean, look at the people in the Bay Area, what they bought, so long ago, and they own, paid $60,000 for a house or $200,000, and now those homes are worth a few $1 million. I'm not saying that's happening in Modesto, but that can happen.
Right.
So.
Well, and most of those Bay Area homeowners still have that low tax basis.
Right, and they can transfer
it to Tuolumne County.
Yeah.
Yeah.
Or any county. I'm not saying not
I think
to go
there's
to Tuolumne County.
I think there's only about 14 counties you can transfer it to.
Oh, really? It's not a state law.
No, not yet.
Are they changing that?
They proposed it, but it didn't pass.
Really? Mm-hmm. Well, you think giving out free things, the government before that.
Right. But Tuolumne County's the only rural county. El Dorado used to be, and they pulled out.
Oh, really?
Yeah.
Okay.
Yeah.
So you could change the property tax percentage that your property was at to a different county?
Well, yeah. So say that in 20, when you go to retire at 55 or whatever it is, whatever your property tax is on this property, if you stayed in it the whole time, could be transferred to the next property.
Oh, I see.
So if you paid, $700,000 for that property, you would still be based off of what you bought this house for, if they do that in the counties, allow those transfers.
Okay.
Because and also you can do it between family members. So say that you keep this house, which I recommend, and rent it down the road, and you end up giving it to one of your kids, and you sell it to them with that equity purchase. They could take over your tax basis that you have.
Correct.
At that time.
I see.
From this period.
So it wouldn't be updated to the
Correct.
Okay.
So at least in 20-some years from now, it's going to be probably $500,000, if not more. But let's just say that example. So that saves you $200,000 of a tax base.
Right. Makes sense. Yeah, it's good to know.
Yeah. Because I have that a lot of times people are purchasing with equity where they gift 20% down and to their person that's buying that house, and then they're able to get in with no money down at all in the transaction. So we got about 2 minutes before we go to break.
So you had a lot of offers on the place that you were buying, it sounds like.
Yeah, there's like 14 to 16 offers, I think. It's
What do you
pretty
think?
competitive.
So that's why you couldn't really ask for that seller credit. On a
No,
normal,
no. He had to pay over asking to get it.
Mm-hmm.
And then if the appraisal didn't come in, you have to pay the difference.
Right.
Which is what I did. Yeah.
But like in our area, it's common for the seller to actually give a credit for closing costs.
It is in our area too, but it just depends on the property. Sometimes people will do it, or there's just too much going on bidding on it.
That would not have worked for you. Yeah.
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 Yep.
Very competitive. I was surprised.
Exactly.
That was one of the things that surprised me the most. I thought, looking at these homes and luckily that's the one I want. I thought, I put in an offer for, let's say, what they wanted, and then I was going to be pretty much guaranteed the house, but that's not the case.
Yeah, I mean, it went over what?
5,000 over.
Over asking?
Not over asking. No.
Yeah.
List price was I think 320 or 330, and I'm going for 360.
Yeah. So here's, in our area, and if it's under the FHA guidelines, it's pretty much a seller's market. People, they just go up like that. A lot of the people who are remodeling them, get them, put them out for that price, and it's picked up right away, sold, multiple offers.
What's your FHA limit here?
Now you have to check, but I think it's 331 or 36. I forget what it is. I'll get back to when we get back from our break. I'll tell you what it is.
Okay.
Hey, we'll be right back after this break. Listeners, if you have any questions or comments for your first-time home buyer, dial pound 250. Say the key phrase Real Estate Jerky. Again, that's pound 250. Say the key phrase Real Estate Jerky. Leave us your comments or questions, and we'll get back to you. Talk to you when we get back. We'll do that. to me. I don't remember those numbers off the top of my head. I think it's
Ours is the 331.
355, 750. I think
Okay.
it is.
What the loan is for.
Right, it's the loan amount, not the
Yeah.
purchase price.
Yeah, my loan amount I think was.
So like CalDRE is 373,
Differs by
750.
every county.
and
Yeah, we should probably tell people that in case they don't know.
like San Joaquin is 425, 500. Stanislaus is 350, 750. And Twain is 331, 200 for one unit. So that means you could actually buy a duplex and go up to 424. So that's just on one unit.
Using an FHA loan.
And people go, huh, why would you do that? Well, I had friends of mine, I'll bring this on the show. I helped them buy a duplex a block from the beach in San Clemente. They paid $950,000 for the place. The loan limit down there max was $850,000. So they sold both their properties up here, put 12% down, and was able to buy this $950,000 duplex. They live in one side of it and rent out the other side as an Airbnb.
Right, yeah.
And they make like $5,000 a month doing that, 3 to 5, depending on the time of the year.
Yeah, some of the girls that were there from our reunion rented a place on Newport, right on the beach. It was only $200 a night when I walked in. So literally got a futon and a folding chair in the living room.
That's it?
And then 2 little tiny rooms.
Oh,
All right, so this section is 12
Oh.
minutes,
how long is the break usually?
however long we need it.
Okay.
Do you need it?
No.
Okay. We can go right into it, so, yeah, it's up to us.
Oh.
I was checking those numbers, and
Sure.
then normally if we're live, when we're live, then you have to go on at a certain point. You have like,
Right.
so many minutes. Okay, we're coming back in 3 minutes, 2. So here we control it.
Cool.
Plus this way I get my weekends back and my wife likes me. All right,
That's a
ready?
plus.
Ready?
Yep.
When we get back, I'll talk about the loan limits and we'll go from there. All right.
I didn't exactly get a Modesto listing on here.
Don't worry about it.
Real Estate Jerky is back on Power Talk 1360. Chew on that.
Hey, we're back, and for those of you just tuning in, I'm Ed Parcaut, mortgage advisor with Lending for Living, and I'm your host, along with my guest, first-time homebuyer Thomas Orosco, and also Betsy Hurst-Younger, Realtor in Century 21 up in Wildwood, up in Twain Harte. It's coming to me. All right, so when we were leaving the break, we were asking about loan limits for FHA, and I had to look them up. So Stanislaus County is $350,000, $750,000, which means that's the loan amount. So you could actually purchase, I think it's $365,000 and still fall within that area. San Joaquin is $425,000, $500,000. Twain County is $331,000, $200,000, and Calaveras County is $373,000, $750,000. So there you go.
And right now we have 293 listings under that loan limit
Wow, that's a lot of listings.
listed in Tuolumne County. It's actually in our MLS. Some might be Calaveras, some might be out of area, but
Right.
293 listings. They don't all maybe qualify because of condition,
Right.
but in that price range.
Thomas, up there, a lot of times the houses have decks, and so then they haven't been taken really good care
Right.
of, and so there's dry rot and stuff like that you'd have to have fixed if you go with FHA.
We tell
makes
people
sense.
safe, sound, and secure.
Yeah.
And a lot of times the issue could be railings that might be too far apart.
Right.
Yeah.
Or they
The
didn't
picket,
do it
the
right.
picket itself. Yeah.
But I mean, FHA is not as picky. The one that's really picky is VA,
Yeah,
because
that's what I hear.
And the reason is because they want to protect the veteran. And sorry, monitor fell in our room. Basically, they want to protect the veteran, and that's what's most important to them. Okay, so and conventional. So if FHA is going to call for it, 9 times out of 10, it's a health and safety issue,
Right.
and conventional could call for it also.
Grab
So,
rail on stairs.
Yeah,
The picket's too far apart, so a baby could fall through. Things like
or
that.
any bare wood. Like one of the things that you see is like dogs chewed on the wood on the outside of the garage door, and that's bare wood. Or a marking bare wood.
peeling paint.
Yeah, peeling paint. So basically, you go through and just touch that stuff
It's
up.
stuff that can all get fixed. Yeah.
Pretty inexpensive. And I mean, they look for like if an appraiser comes through and if they see it, then it's blatant. You know, dry rot, the flooring in the bathroom's ripped up. You can see the tile curling, you know, cabinets are missing a door knobs. I mean, it has to be pretty much really in your face kind of stuff.
Luckily, I didn't have any of that. So
No, you
it worked out good.
And was your home, did they flip that house or was it remodeled from the owners? I don't remember.
It was remodeled, yeah. It was one owner. They've been in it for like 40-plus years. They took great care of it, and it was move-in ready.
He said they actually showed him a photo of what the lot looked like
before
the house was born, or before the house was built.
Mm-hmm. Where was I when this talking about?
We were
was it
just
during the break? You guys keep me out of that?
No, before.
All right. So let's go back through your process because then we'll bring up your listings later if that's okay, Betsy.
No, that's no problem.
Okay. So you went, all right. So first step was, let's talk about that. How your step was. You guys were dreaming about buying a home.
Yeah,
right?
we wanted to go
through
to
the open
house,
houses.
get the experience, see what it looks like.
And a lot of people don't realize. I mean, we tell people the open house doesn't sell the house. That's for people to look at the house, and So when you went through the open house, you decided we need to go this way, right? Mm-hmm. So what your first step was? You called a couple people.
Yep, got a couple quotes. See what I can get approved for.
And then you got qualified,
mm-hmm.
and then the biggest thing is the offer, right? And I remember having a conversation with you, and you were just like, "Oh, I'm going with this person online, and please just bear with me here."
Yeah.
And then I told you one of the issues about going with a local lender is we're very competitive too, but the difference is a lot of the listing agents know us,
right?
And we can call them and tell them how great our client is, and this is why you should pick this one over them. And you just explain who they are, and a lot of good lenders do that. Loan officers is what I mean, and that helps your client get that property. And I, because you had 16 offers, and then they countered 7, right? And then you got yours,
right?
And I'm pretty sure a lot of them were close to that.
Oh yeah, they even told us the sellers were like, they were all equal. I think they had 2 that came back with what they wanted, but like what won it out in the end was Haley wrote a letter. We wrote a letter.
Did you write a letter?
I always tell people write the letter.
Write the letter.
Right, and that sealed the deal.
Yeah, you got to get that emotional attachment because they see so many different offers. Not everybody does it, and make it a really honest letter.
Yeah, and that's exactly what we did.
So when did you actually close escrow?
I believe April.
So the month before you got married.
Yeah, month before. Yeah, so it was all settled.
So your letter was like, "And we're gonna get married, and we're gonna live in your house."
Yeah, pretty much.
And we love it.
We can see our kids growing up here.
That's all
Yeah.
true.
Yeah,
we can
exactly.
see them. We can see them marking their height on the door frame. You didn't do that, did you?
No, I don't think it was that detailed. But
yeah, we won't cover up the one in the garage.
I've had people want to take those door frames with them.
In the house that we sold before we moved back to our house that we're in now, in the garage, it was on the sheetrock, because it was a 3-car garage, so it was a half wall, and
right.
it had done it on the half wall. There's no way to take that.
No, you take a photo.
You take and paint over it.
Paint over it.
Well, you have for the new people.
The new owners
right?
gotta feel guilty painting over that stuff.
Yeah, so
That's
you do
all
it
I can
for them.
think.
You do it for them.
Yeah. Oh my God.
But it's and that's the one thing about even why I like older homes is you go in there, and if you go in the attic or you go in we bought a cabin up in Cold Springs a long time ago, and when I had to go in the attic, I found a box and it had some old tools from the 50s in there. And before, you could just see somebody put this up there when they were doing something and totally forgot that it was up there and it covered it up with insulation, and so it's neat with older homes. I mean, yours isn't that old, but it's just nice when somebody else's house. When it's a brand new house, your biggest headache is the fact that nobody put a wax seal on the toilet in this bathroom upstairs.
Right.
And it starts leaking because they're in a hurry. They forget about those things.
Right.
That happened to my wife's house. By the way.
Okay. Yeah. I've had a box of old tablecloths left before, and the buyers didn't want it. I ended up with a box of antique tablecloths.
Oh wow.
We love it. We use it. Yeah.
Because you don't care.
That's cool.
I would not throw anyone's antique tablecloths away. Yeah.
Other people just call those old.
Old. I know.
They just sound better, antique.
Yeah.
Few statistics right now. The average first-time home buyer in California right now is what age do you think? Don't look at your notes. Okay, too late. 32-year-old. Yeah. The average income would be $72,000. I don't know how they got the average home price at purchase $190, and
That seems kind of low.
That's really seems well. That's definitely not in our area.
It's not really in our area either.
The average down payment is 5%. And it's, I'm right now, and every year I have to go back through education to do our loan system. And one of the biggest, it's great, but one of the problems is it's always pretty much the same stuff. So you click. But now they're having to think about student loans. And they were talking about how, and it's even on here, the average student loan debt for people is $29,000. And how that keeps people from buying homes your age and stuff, basically. Yeah. And I said this before, I've run into two people who one had $250,000 and another one $440,000, and they're only making $70,000 a year. It's like you'll never pay that off.
No.
And if you make the minimum payment, you'll never pay that off.
Isn't that like $25 a month or something?
It depends. It's based off of your income.
Wow.
Yeah. So.
Well, hopefully they got a good job.
Yeah. Hopefully someday. Let's see, 54.4% of homeowners, all age groups in California, overall second lowest rate in homeownership in the nation. So basically, it's very unaffordable, I guess, in California.
And never heard that before.
I would have thought that would have been more like 290 for median price range.
Oh yeah.
Yeah.
Excuse me today. I guess that new weather that we have.
Oh my gosh.
The coldness, leaving your windows open.
It's nice.
Yeah, it's nice, but then you get that little allergy stuff start going because all the almonds are being shaked in this area.
Yeah, I haven't changed from Tevas or flip-flops yet. My feet
Don't
are
worry,
cold at all times.
It's going to be 80 next week.
I know.
So
That's
don't
what I
worry
heard.
about it. We're coming back. It's that whole thing is you never know what to wear in October because, especially for Halloween, some years you're going to be in coats and some years it's going to be so hot for your kids. So what are you going to do?
I know.
Just get through October.
That's right.
Yeah, and then it's going to be,
cool.
Oh, man, I'm so tired of the snow. Right?
I know. That's what happened right after the drought. We, kind of ended the drought a little bit up there in the mountains. And then people were saying, okay, I'm done with all this rain. And it's like, no, we want the rain. We want the snow.
Right.
We still have snow melt.
And there'll be snow on top of that.
I know.
All right, so let's go back to Thomas before the break. All right, so through your transaction, what was a couple things you didn't realize? Is that too much to throw out there that you were like shocked or it was how easy, or was it the fact, how hard was it? How easy was it? What?
I think the most surprising thing was how competitive it was. Trying to get your offer, drafting it in a way that's attractive for the seller.
Right.
And to ultimately get it selected. I think
that means 2 minutes.
But okay, yeah, that's the toughest part, I think.
That was it. That was the whole thing.
Well, a lot of times when people get in a multiple offer situation like that, they pull out because they don't want to be in that kind of situation and get that emotional, just the competition going and maybe bid more than they would have normally wanted to bid.
And see, I call it the eBay effect.
Yeah.
Where the people want to get in, they're in that situation and they want to win it at all costs. So they write it for as much as they can to win it.
Oh, yeah, that win it.
Yeah.
Definitely.
And that's why a lot of sellers in the past have priced it under market so that they
do you think that's what it was, or do you think it was just the location, or?
I just think it's price point.
Yeah.
Yeah, and our price point especially, I think.
A lot of buyers in that price range.
Yeah, I mean, $300,000, $330,000, $360,000, that if they're down, that's still if it's within the FHA guidelines.
Right.
That's the big thing. I mean, and it's still that way in our area. I was talking to a guy in my Rotary who flips homes, and he's like, I never get anything above that. And he puts it on the market, and it's gone in hours.
Right.
Wow.
Because we don't have enough homes still being built.
Right.
So they're remodeling them to brand new almost, right? And they're selling them for inexpensive.
That was actually one of the topics at the California Association of Realtor meetings I was just at, is that we're way behind on number of units for new construction.
Yeah, why don't we hold that for when we come back from a break?
Okay.
Hey, we'll be right back with we'll be right back after this break. I'm losing it today. And normally, at this point I talk about support for our military. I want to give another shout out to my son, Blake, who graduated from boot camp over a week ago and is in Fort Sam Houston, Texas in his medical training right now. And he's finding out how hard that is. Yeah, when you really want something. So we'll talk to you when we get back. All right, bring us back. And what are we going to talk about?
Good question.
That is a question for you. 10 best metro cities. You paid what, $360?
$360, yep. That's what we agreed on. She is an accounting clerk at pay. Yeah,
So similar.
I think it's similar.
You guys
Who does
talk
your
numbers
taxes?
all the time?
Oh God,
No,
no.
I said, who does your taxes?
I do my I do our
Yeah.
taxes.
Still.
Yeah.
Yeah.
But we don't have anything complicated, you know. So it's just like a
Yeah,
1040
I do.
easy or something like that for us, right?
Yeah, you take the standard deduction.
Yeah.
And if you want to talk about that,
What?
about just like we can bring up how. So how was it your first year doing your with taxes owning a home? Have you done
Yes,
it?
I have done
it yet.
Yeah,
No,
yeah.
it's not yet.
So
If you're looking forward to deducting your mortgage insurance
yeah.
and your taxes.
He's
Honestly,
still
I think
going to
it's gonna be the
itemize.
same.
He's still not going to
don't think I'm
itemize
gonna
because he
itemize.
doesn't probably have enough to write off. So each one of them get 12,500, and that's 25 grand. That's probably way more than.
I'm
they get
excited
out of
for it. Yeah, that would be cool.
Yeah. Of course. What's your payment?
2,200, but we usually try and put in a couple hundred or.
And that
100
includes
for
your.
That's including taxes and insurance.
taxes, insurance. Yeah.
So you know what I noticed on my
PMI.
tax bill I just got, because I've never had it wrapped in
Oh.
like that.
Mhm.
And I got the tax bill that says, your lender asked for a copy of this. I'm being taxed 2,100 and something bucks, and I only bought it for 170. So my tax basis should be more like 1,800.
How long ago did you buy it?
It was the one for Haley, or
Oh.
up there in December,
What was the purchase price?
170.
That seems high, no?
Huh?
That seems high.
Yeah, it's.
Yeah, and I know the people at the tax assessor office. And it's like, you guys,
Should be 21.25.
yeah.
No, a year, 21.25. Is
How
that what
much
it
was
is?
yours?
It is, it's 2132 or
Yeah,
something like that.
then it's right. It's 1.25.
Oh, man.
Bummer.
I'm sorry to burst your bubble.
I was hoping my payment would go down.
Are you bringing us in or out at all?
Huh?
Who?
Betsy?
Are we what? What do you mean?
No, because usually other
No,
people.
no, I'm not.
That's bullshit.
You're an expert at this, right?
Yeah. All right, we're back. We want to talk about math, about your numbers, payment wise, and all that stuff. So, I'm just gonna average it,
Yeah, sounds good.
and then you can talk about, and then I'll bring up about the tax thing, and you can talk about that. It's not all about you buy for building wealth, not because of tax purposes now.
Yeah.
So when I used to sell, and I'm like, okay, you could save so if you have a $1,500 a month payment rent, you could actually afford a $1,700 a month mortgage because of the write-off, right? We'd be able to show the numbers. You can't do that now because it has nothing to do with interest, nothing to do with what you can write off. All right.
Are you gonna talk about how someone could buy a duplex or something like that with a first-time home buyer? or-
Would you like to bring that up? Why do I have to bring everything
Well,
up?
because you kind of brought it up with your friend.
Oh. I didn't do it online.
I know you
Yeah.
didn't.
Well, you can say, hey, Dad, during the break.
Yeah.
Feel free to, throw it out
Yeah.
there. It's not like it's the Ed show. I guess it is, but
Yeah.
besides the point. Man, this segment's going to be just like the last one, 12 minutes.
Okay.
Went pretty fast, didn't it?
Yeah.
It does.
Okay.
That's only the first show. It takes forever. When we first did it live,
Mm.
it's like. All right.
Real Estate Jerky is back on Power Talk 1360. Chew on that.
Hey, we're back. I'm here with my guest, first-time homebuyer Thomas Orosco, and for fun, Realtor Betsy Hurst-Younger. I always hate when they say Realtor.
It's
right?
Realtor.
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 You don't say Loy-itor. Right.
Exactly.
And I'm your host, Ed Parcaut, mortgage advisor at Lending for Living. So when we're at break, we're talking about a bunch of different things, and you asked, I was talking about, they want me to talk about your math, if that's okay with you.
Yeah, that's
all right. So you bought your house for $360,000, and so your down payment was $10,800, right?
Just about.
Yeah. And then on average, depending on the time of the year, I tell people, depending on where they go through in the cost, it could be anywhere from $5,500 to $7,500 for closing costs, including your impound account. Is that about right?
Yeah, that's about right.
Okay. And so,
And closing costs
so
include,
that's closing costs included in that.
right? But closing costs are title and escrow,
Correct. And if you're
any insurance.
Correct. And then also if all the escrow title fees, like you just said.
Lender fees.
If there are any lender fees, if they're charging underwriting, processing,
Appraisal,
discount points, appraisal, tax service, credit report, all those fun numbers.
Now, do they still require 1 year of homeowner's insurance, or is it only a few months?
It's basically 1 year if you're impounding.
Okay.
So you have to buy 1 year, and then you have to impound 2 months.
Got it.
So that the next year it's there. Now, if you're not impounding the loan, that means you don't have it in the payment. Then you don't have to do the full year. Sometimes you can just do it monthly.
Yeah,
Right.
mine was a year.
Yeah, well, because yours was impounded. Because if you don't put 20% down for most places, you have to have an impound account, that's the account that pays your taxes and insurance for you. That's in your payment, so that your payment has a portion that goes towards that escrow account each month, and then they pay your taxes twice a year and your insurance once a year for you. However, we can, if you have at least 5% down, now get away with not having to impound. I can even not impound on VA loans now, which for me, I feel you should impound. You never get behind on your taxes.
It
and
makes it a
insurance.
lot
It makes
easier.
it so much easier because one of the biggest problems is your taxes are due twice a year at the worst time. You have it
Right
around,
before Christmas.
right, and then right before tax time in April.
Exactly.
So why not just have it all taken care of for you? And then your insurance is going to be due a year from when you bought your house. So depending on when it's going on.
Taxes are literally due 5 days before. I mean, the impound those taxes before the other taxes.
Right.
And it's like crazy.
Yeah, especially if you're self-employed. All right, so and just doing quick numbers, I'm not going to tell people your interest rate. I'm sure it was pretty low.
Yeah, it was competitive. Yeah.
Was that?
Well, they're talking about getting even lower, right?
Yeah, they're still trying to work on that. So basically, what are you paying, about $2,200 a month for that? Okay. So for the average person, that's not a bad payment. Meaning that, I mean, it's affordable.
Right. Yeah. For our situation, it's comfortable.
Yeah, I mean, it's harder for one person to do it. I mean, you
Sure.
qualify by yourself, but I mean, for a lot of people who are just getting it, you have a really good job, which helps.
Yeah.
And then now you're married, that helps even more.
That's the best.
Yeah, that is. So don't get married just to buy a home. You shouldn't do that.
Right. It's a perk.
Yeah, it's a partnership, right?
Well, then you also compare that to what you would normally pay for rent.
Right. And in this area, that's pretty close.
Right.
I mean, depending on the house, but for a decent home. And I don't mean that, I'm just saying depending on how many bedrooms you need, how many
Right.
this and that kind of stuff.
Well, with the lack of new construction in the entire state, I mean, we're supposed to have 180,000 new units built in California every year to keep up. And it's been years. This
Right.
year so far, only 114,000 new units. So
Right,
we're
and
way
you look at
behind.
you look in our area here in this area, Stanislaus County. There's got a few hundred units being built in Oakdale and then also Riverbank over the next 5 years. And then they have the only thing right now by the mall being built. So there's not a lot going on. And so we're not seeing any relief anytime soon.
So do you see millennials moving into those, or do you see commuters from the Bay?
I don't know. I've never been there to look.
Yeah.
I mean, I don't know. I've not been to the new, but
Right.
pretty much, I mean, I'm sure it's depending on the price point
Right.
in this area. So
It'll also depend on what that new high-speed rail.
when's that coming?
Not soon, as far as I know. I don't know.
So, I mean, and so in our area, I mean, you look at the homes, that's why when people are finding older homes and getting them for a really cheap price, fixing them up, remodeling and flipping them,
Right.
it's helping, and they go because of the fact that there are no new homes.
Right.
And we were talking about FHA, and you brought this up in break, where for a first-time home buyer or anybody, if you buy FHA, you can buy a 2-unit, a 3-unit, or a 4-plex and live in one of them, rent out the other 3.
You remember my daughter bought the 3-plex last year as a college student.
Was it 3?
Yeah, 3 one-bedroom units.
Yeah, that's for me. I try to get people to do that the first time. That way, you have an investment, right?
Sure, yeah.
And then when
Make
you
some
get
money.
married and you go get your kids, and then you move into your other house, and you keep this forever as an investment property.
And you use the rents.
And I had some clients who wanted to move to San Clemente forever, and they ended up helping them buy a block from the beach, a duplex down there for, I think it was $950,000, and their loan amount FHA down there was $850,000, so they had to put down 12% to buy a $950,000 property. And when they sold both their homes up here, because they'd bought a small house during the downturn and another house, and so they were able to do that.
Wow.
Yeah.
And that extra unit's helping them pay.
Yeah, they do. I think they Airbnb that, and they make pretty good money doing that.
Yeah.
And that's in San Clemente. So it's like, it can be done. It's just, what do you want to do if you want, and Thomas can talk about this, if you want to buy a home, your first step is to find out if you qualify.
Mm-hmm.
And so you don't think to yourself, I need 20% down, I need 10% down. Because I'm constantly telling people, even buying second homes, they think they need 20% down. They don't. They need 10% down.
And then your realtor helps you find the house that qualifies.
Right.
You qualify for the loan if they find the house that helps qualify for what you'd like.
Because you don't want to go to, if you only, like, you qualify for 360, right? And then they showed you a $600,000 house that you don't qualify for.
Yeah.
Then you don't want to buy again. Why do
That's
I
right.
want?
I can't get that.
Yeah, it's like going shopping
But I
for a car.
loved that house.
It's like going shopping for a car, and then now you can't. The car I really want, I can't afford.
Right.
It's good to know to have like a range, like, okay, you can have 3%, 5%, 3%, 5%, 10%, and you can just run the numbers and see like what works out, I guess, best in your favor. Because I know that, depending on how much you put down, it's going to affect different things like interest rate and PMI, things like that.
Right, and that's great. I'm glad you brought it up because I was thinking about, I have a client right now, I'm giving him different scenarios, and he's buying a home up in your area, in Tuolumne County, and they're looking at whether or not they should go with more down to get rid of the PMI, and then what does that do for rate. So I gave them like 4 different scenarios for them to choose from, all the way from buying the rate down as low as they can with make those numbers. Because for me, there's a diminishing return on paying discount points, and the problem is a lot of places when they quote you, they'll quote you with 2 discount points in there, and if it's a $300,000 loan, that's $6,000, and you have to see if that makes sense over the life of the loan. And for some people, they might not be there for 30 years; they might be there only for 7 or 10 years. And does that make sense? When do you pay yourself back that?
Yeah, I remember, when I was looking at all this stuff, points is one of the things I was most confused about. I wasn't sure, like, okay, is it good or is it bad? But it really depends on how long you're going to stay there. And you do the calculations to figure out, okay, I need to stay here X amount of years to get paid back or break even, to make it worth it.
Right, and I try to keep within the lowest amount of that cost-wise for the rate, because but I show all numbers, and I was up against somebody else on another one, and they're like, well, they're doing this, and I'm like, I can charge you the extra $4,000 and get you that same rate, but does it make sense for what you want to do?
Right.
Mm-hmm.
And that's what we have to figure out before you even go there. Let's make sure those numbers work for you. And that's how much, because you might need to take that $4,000 and fix the kitchen because your countertops are bad, or you need to put something else. Why you have to look at that. And I ran into a guy who's trying to put down on a $200,000 house $100,000, and I'm like, why are you doing this? Run the numbers. Keep that extra, only put 20% down. Look at the payment, and keep that extra $50,000.
Right.
Yeah, liquid, do whatever you want
put it in some other investment, or buy another one.
Right.
Have it work for you. Don't put it all down, because when you need it, it is very difficult to get that out of that property. Because the times you normally need the stuff is when you've lost a job, or someone's sick, or something happens, and that affects your purchase power, what you can do. So so when you ran the numbers, were you shocked at what the difference was? And
yeah, I feel like the more sometimes, at least in our case, I was looking at 3 to 5%, and it just didn't make any sense to put the 5%.
You're talking about down payment, just so people understand what you're talking about.
Yeah, down payment in terms of like the effect on PMI,
or the payment
itself. Yeah, exactly.
Because for most people, $1,000 difference is only about a $5 a month difference in payment on average.
Right.
So if you're looking at putting down, in your situation, 1% is $3,600. So that's $7,200 extra. Mm-hmm. Does it make that big of a difference in the payment? It wouldn't.
Versus having the extra cash.
Correct.
We just bought a house. We didn't really know what to really expect. We felt pretty confident though, but you never know what could go out, I guess.
Well, and that's why we tell people, make sure, and most agents tell people, get a home warranty.
Right.
And even with a home warranty, you might have costs that you have to pay. Your hot water heater goes out. They don't pay for certain permits or certain things that you still have to come up with some of that money, not the whole thing, but a portion of it, because it's not covered. Or if it's a air conditioning and heater, you might have to come up with, if it's a $7,000 unit, you might have to come up with like $1,300. So you need to have money. People don't realize, you buy a house and people complain, I had to do this in my house. I had to do this. It's your house. You're making it better for the future for yourself and building it for yourself. That's how that works.
Even brand new houses have issues. Yeah.
Yeah, a lot of people, I want a new house because I don't want anything no one's lived in and there's no issues. Oh, okay, builder didn't do this, and now you're suing the builder because of this and that, and
and no one's ever turned this on, and now it doesn't work.
Right. The
Right.
foundation's cracked now.
Right. Exactly.
It's a learning process. Like I've learned a lot of things that I wouldn't have done otherwise. I guess I just replaced
Like?
a kitchen faucet. You know what I mean? Simple plumbing things. So I end up YouTubing a lot of things. Simple things that I can do myself.
Right. And did you get a home warranty?
I actually didn't.
Oh.
No. I felt pretty comfortable with the inspections, but we had that. That goes back into our 3 to 5%. We still had some money left in case anything did happen.
I mean, even myself, I still have home warranties on my house after.
Oh, really?
Yeah, because I don't want to hire somebody to put a garbage disposal in. I don't want to do it.
Because he's telling you he's not handy.
I'm very handy, but I'd rather do other things than do that
okay.
work. But we can pick this up when we get back.
Okay.
Hey, we'll be right back to more to chew on about first-time home buying right here on Real Estate Jerky. If you have any questions or comment, you can call us pound 250 from your cell. Say the key phrase Real Estate Jerky, and we'll talk. We'll talk to you and get back.
No, it gets to a point where it's like, I'd rather be doing something else than working. It's like vehicles. Yeah, I can change brakes. I
Yeah.
can do this. I can do that.
I can do the oil,
But by the time I get done with it, I've just lost 4 hours. I could be
versus
doing something
$20
else.
or something,
Yeah,
right?
yeah.
I think.
Changing oil. Yes, I can do it, but then I gotta get rid of the oil.
Yeah.
Or I gotta get rid of the
Yeah,
oil
exactly.
filter, and my hands are greasy. And
My hands are greasy.
And I have now oil on the sink in the garage, and my son helped me, and now I got oil marks on the door frames. All right, so you gotta bring up
About my
your stuff because
stuff.
you're gonna take most of the time.
Try not to.
Is there anything else we need to hit?
Where's your sheet?
I don't know. I didn't bring one. I'm not prepared.
You're doing good.
Yeah, you're doing really good. Competitiveness, ability, down payment flexibility. Talk about that.
What's that?
Credit score.
Yeah, that's important, man. Holy moly. That's like numero uno right there. Is
Well,
credit
it's down.
score.
Yeah, well, it's that whole thing down. But you see, when you do 3% down, if you go conventional, you have to have above. It needs to be 720, at least 700, but it's better to be 720 and above because you get the lowest mortgage insurance, you get the lowest rate. Otherwise, you go FHA. Period. Plain and simple.
The only thing I don't like about that is that you pay that PMI forever, right? Essentially.
Yeah,
for
but I
lifelong.
guarantee you.
When your equity goes up, you can refinance. and take it
But,
out.
but yeah, most people don't stay in that first loan. Anyway, they do something else. Like you're not even thinking about staying in this loan. Thinking about refinancing right away.
If it makes sense, it makes sense, man.
Well, you know what? He's got to make 6 payments before he can do that.
Right, we
Right.
already talked about it.
I've already talked to him about it too. I know. Because I did a refi at the
November.
beginning of the year.
I mean, yeah, otherwise you lose money. You know what I mean?
Well, it's actually it costs so much for us the origination part of it to do all because of all the new laws and everything. It costs like $8,000 for to originate that loan internally. So that's why they have that restriction, especially on FHA. FHA and VA, you can't touch it. At all.
In terms of refinance?
Yeah, refinance. They make you have to 120 days and yada yada yada. Conventionally, you can kind of get away with it, but they really try to frown on it because it's the same thing. They try to
Interesting.
early payoff is what they call it. All right, so we got 8 minutes. We go back and we'll get this done. So I'm going to bring us back in and let's talk about. I'm going to ask you: is there anything else you want to go over, Thomas? And you're going to say, "Hey, I want to talk about
Credit.
how important I didn't realize credit score was," and then we can add on that, and then you're going to go in your properties right after that. I'll get us right into that. Okay.
When my daughter went to Fresno State, she had to totally educate
Okay.
all of her friends about credit.
Oh, yeah? That must have been fun.
It was.
Leaving the bull behind. It's Real Estate Jerky.
Hey, we're back for our final segment. I'm Ed Parcaut, mortgage advisor at Lending for Living with my guest. It says real life first-time homebuyer Thomas Orosco. I'm glad you're alive. And Betsy Hurst-Younger, Realtor with Century 21 Wildwood Properties in Twain Harte. I kind of want to go back to a couple different things we were talking during the break, and you brought up about credit score.
Yeah, that's a big one.
Yeah. Were you shocked about that? The difference?
Yeah, it makes a huge difference. It makes everything that much easier if you have a good score.
Right, because I mean, if you're doing 3% down on conventional, I was talking during the break, you pretty much want to have at least a 700 FICO score. If you have a 720 or higher, it makes it so much easier. You get the lower MI, which is mortgage insurance, which is a payment per month to protect the loan in case it gets defaulted. And also your interest rate is a huge difference. Now, if you don't have that type of score, it's not a big deal. Then you go FHA, 3.5% down, and you just have, that's just work with those guidelines. The difference is that 3% down first-time home buyer conventional could go up higher. It can go up to the 484, 350 purchase price, the loan amount. That's the difference. Right. Where FHA is stuck to whatever it is in your area.
That's right.
Okay, I hear you. Everybody can't hear your head shaking there, Betsy.
That's okay.
All right, so we talked about credit score. I think we went over a bunch of the stuff that you wanted to cover today, right, Tom?
Right, yeah.
And then I wanted to cover also. So, Betsy, let's talk about, I know you always bring some listings about, and today's was first-time home buyer listings, and you were talking about there's a 200 and some?
293.
Right, and that's in your area,
in the Tuolumne County multiple listing.
Right, and so they're probably, I didn't get numbers for here, but I'm sure there's
122 listings in our area under 250,000.
Wow.
And
I mean, wow, that really
yeah.
well. And I was shocked, and just so you know, I had a client come to me, I only qualified for 150,000. I'm like, you're not going to find anything up there. And then they found something for 107. Yes, it's only 500 square feet, but they found something. So there is stuff, if you're thinking about you want to buy, now is the time to look in certain areas. And if you're able to commute from Sonora, right, to wherever, which for some people, it's not that big of a commute right now.
No, I've actually got one listed in Jamestown that's only, I think it's about 10 years old maybe, and it's a perfect commute.
How much is that one?
$295,000.
Right. So that's,
yeah,
your payments right
3-bedroom, 2-bath, has an attached garage.
$19,000 a month.
Right. It's a nice place too. I mean, it's a little over 1,800 square feet. It's awesome. All one level. I've got one out in Tuolumne.
Why don't you talk about your listings?
Okay.
And how they get a hold of you.
Oh, I've got one out in Tuolumne City. That's actually on 4 city lots with their small lots, but it's a big corner lot, and that place is down to $239,900.
How big is it?
That one is a 3-bedroom, 1.5 bath, and it is about 1,300 square feet.
So not real big. I mean, not huge.
Has
but
a detached
it's
2-car garage.
Yeah.
And when the seller purchased it, I think they also used an FHA loan.
Right.
So he's prepared for that. And then if you would rather have something up in the mountains, a little bit higher elevation, the Miwok area, I've got one listed for $239,500, and that is
Need a second home, Thomas?
Yeah, really. And I mean, this is an okay area for Airbnb and VRBO.
Right.
And we use a lot of those services up there. I mean, we've got a lot of homes up in that area that are in those on those sites. This one's on 0.38 of an acre, and it backs up to forestry land. I mean.
So get your quad and get your gun, go hunting.
Well, your skis and your snowmobile too, because you'll get some snow in that elevation.
Tuolumne City?
No, this one's Miwok.
Miwok, yeah, okay, sorry.
The Miwok one. So,
which is Twain Harte.
Yeah,
right?
Just a little bit above Twain Harte, about 4,500 foot elevation. The lowest elevation one was the one in Jamestown. And then out in Tuolumne, near Black Oak Casino. We've got a couple more concerts coming up, too.
Do you?
Yeah, Peter Frampton.
Ooh.
And Foreigner.
I could do Foreigner, but not Peter Frampton. Sorry.
Exactly. I know.
So, as you see up there with the listings, how's that going? I mean, you're getting more?
We're seeing more come on the market. We're seeing some price changes, some price adjustments. Improvements
That's
is what they call them now. Yeah, price correction. Yeah. And we are on the state level, we're seeing a lot of sellers moving out of state. And the lack of new construction isn't helping us either. We need workforce housing. We need homes for the people who actually, work at the grocery store and work at the gas stations and do the things that we need on an everyday basis.
You're talking Tuolumne County or
everywhere? The entire state.
I was going to say you have them in Tuolumne County with what you're telling me,
right?
Number-wise.
Right. It is affordable there, and we have internet.
That helps.
That's what people wonder. Do we have the,
in Sonora, you have
basic
Comcast,
services.
right?
We have Comcast.
How far does Comcast go up?
You know what? Comcast is all the way up above Miwok.
Really?
Yeah.
Because if you don't have that, then you have to have HughesNet, or you have to have.
I have a company called Conifer because I live on acreage, and that's actually some local. I call them kids, but they're in their 30s that created their own company.
And that's a line of sight thing, right?
And it's really good internet. Yeah.
Yeah. So I mean, yeah. So if you're looking to buy a home and price point, and they want to look for this home up there in Twain County, what's your phone number, Betsy?
My phone number is.
I asked you to give out.
I know
how to
it's
get
604-2609, area code 209.
One more time.
209-604-2609.
And that's how you get a hold of Betsy Hurst-Younger of Century 21 up at Wildwood.
Text or call.
That's right. And I would tell you, if you're working with any agent up there, text them. It is, I don't know if you've been up there, but the cell coverage, that is even though they have internet and all that, the cell coverage is where it's the worst, right? I mean,
right.
And if you don't have Verizon, it's even worse.
I mean, it's not that bad. But
I'm just saying you're in and out of certain
right.
areas because of how the hills are and the mountains, that you're better off texting because you can get that all the time.
Pretty much all the time. And I think before we talked a little bit about fire insurance when the last time I was on.
Okay.
And
I'm trying to remember. It's so long ago.
I know. Well, we've since had other companies come back and start writing, and we were just talking about USAA and State Farm, and we've got people getting quotes and non-renewals quotes are higher than normal, but shopping around does work and does help.
And that's everywhere, because I heard from somebody that it was happening up in Tahoe, right?
It's happening in Tahoe. It's happening in the Napa, Santa Rosa area. It's happening in Santa Barbara. It's happening in Anaheim Hills. It's in the San Diego Hilly area.
It's in San Marcos.
They say,
in Vista. It's all those places down there.
They say it's about 4% of homes in the state, but we think it's a little bit more.
It's just anytime any fire hazard area they consider high fire area, right?
Right.
Yeah. But there's people who are going to write the policies. It's going to take a little bit of time to get back to a normal thing.
They've actually got people out there that'll help you find insurance and help you work with your insurance company also.
Yeah, I know USAA, that's what I have for my home insurance, and if you can get them, they're awesome.
Yeah, so you just need somebody in your family who's, if you're
Is your
not
dad
the
military?
Yeah, my dad's military. Yeah.
Because for me, my cabin in Cold Springs went from $2,500 a year plus broker fee down to $895, and now census went up to like $1,500, but
right.
That's still very affordable.
But since my father was military, I was not. I was able to become a member of USAA and my children, so it goes down the line.
Well, give me your number again in case they have questions about insurance. I'll call you.
Okay, 209-604-2609.
All right. And Thomas, I want to thank you for coming in today. I really appreciate you coming in.
You're not going to give him your phone number?
He doesn't want calls. He's already married.
Yeah, no problem. Thanks for having me. Appreciate it.
They were great. Thank you.
Thank you all for being here today.